Alrighty guys, so in this video we're going to talk all things risk management with a focus on the topic of risk to reward. A lot of people ask me on YouTube and my Discord when I coach them, does a perfect risk to reward exist? Should you be going for a 1-to-1, a 1-to-2, a 1-to-3? Or is there a way to balance the benefits of a higher risk to reward system while still paying yourself as a trader? That's going to be today's topic. Let's get straight into it. So firstly, let's look at the benefits of a low risk to reward system. And for this, we're going to discuss the topic of 1-to-1 risk to reward. Now, I just want to put it out there, there's nothing wrong with taking a 1-to-1. The win rate is often much higher, right? Your psychology is probably going to be better, and there's less time for the trade to play out. So a lot of people say, well, what's the benefit of going for a low RR system? Well, these are some benefits here, like number 1, number 2, number 3. And the best thing about a 1-to-1 risk to reward is that it's suitable for many market conditions. And also a lot of people here, like myself, trade prop firms. So if you're worried about trailing drawdown, if you're worried about, holding a trade to a 1-to-2 and then it's stopping you at break even, this is the system to start off with, in my opinion. It's more achievable, it's good for psychology, and the win rate is often going to be higher. So a 1-to-1, here are some benefits. But what about the flip side of the coin? What about some negatives to this small risk to reward system? Let's talk about it. So these are some negatives, right? Number 1, people may take too many trades. Like for example, what if, you take a 1-to-1 trade, but you're done within 2 minutes? You might have the urge to come back later. So your psychology could be tarnished, or your account could be tarnished by taking too many trades. Number 2, it does require a high win rate to sustain profitability. So if your win rate based on collected data is like 50% or 40%, at 40%, you're barely going to be making money, nothing at all. And 50%, you'll barely break even. So you need to have, if you're going for a 1-to-1 risk to reward, we'll talk about it, you need to have a strict risk management protocol. And we're going to talk about some steps, some strategies later on how to manage risk and how you can do the same. What about a 1-to-2? A lot of people preach 1-to-2. 1-to-2 is the best, 1-to-1's too small, but here's the thing. Not every market condition will warrant a 1-to-2 risk to reward trade. And what I like to say to people is, have a balance of lower risk to reward and higher risk to reward, and we'll talk about that later in the video. Now, what are the benefits of doing this? You need a lower win rate to be profitable. So I'm pretty sure you can get about a 35% or 40% win rate with a 1-to-1 or 1-to-2, risk to reward, and you'll still be profitable. You'll still be profitable. If you can have a 50% win rate, which is not that high, on a 1-to-2, risk to reward, you're very profitable. If you have weeks where you have a 60 or 70 or 80%, extremely profitable. So obviously, the potential for growth is just crazy, right? It's crazy. But what about the negatives? Because you might have been in positions, I guarantee you've been in positions, and I've been there too when I first started trading, where everyone preaches the 1-to-2. Maybe what happens is you enter a trade here. This is your target, right? Price does this, you go to break even, it almost hits the target, then reverses back down. My philosophy is this, so write this down. Why not take a partial here and then leave a runner, right? So why not get the best of both worlds? Why not go somewhere in the middle? And that way you have a combination of the benefits here, but you get less of the negatives that are associated with the really low risk to reward and the middle range risk to reward as well. And the same thing would apply here, right? Obviously, if you take a 1-to-3, your win rate can be extremely low. It does not have to be high at all. And if you have a high win rate on a given week, you're going to be extremely profitable. But let's talk about it, right? Because maybe this sweet spot exists. Maybe there's, that candy spot, that sweet spot that you're looking for, where we could have the benefits of both the 1-to-1 risk to reward, but also the benefits of a higher risk to reward system. Does it exist? I reckon it does. Let's talk about it. So write these down, take a screenshot, do what you need to do. And this is pretty much my risk management system. It's the risk system. We want to follow this. This is going to allow us to take high risk to reward sometimes, but also pay ourselves as a trader. So we're going to read through all these points. And then later on in this video, I'll go through some examples of trades I've taken where I've implemented this system and how it actually works out. So first stop point here says, if, and here's the key point, if it's your first trade, then in my opinion, take a partial at 1-to-1 and hold a runner to 1 to 1.5. And further if there's a clear draw. So This point here, you've got to collect data on, because as you get more experience, you're going to find yourself being able to hold trades a little bit longer if there is a clear drop. For example, let me just add on another page here so you guys can see. So let's illustrate something here just to, give you an example. Say, for example, the market does this, right? We react from a higher time frame fair value gap. There's a macro down here. I teach macros. That's what my YouTube channel is about, my Discord, etc. We come down here. We push from the macro in a 15-minute gap. You could enter from here. Let me draw this out in green. You could enter from here, take a partial here, and go to break even. Now, because we have all this low resistance trend line, you can then hold runners. You could just hold it to this high, this high, this high, or this high. Or sometimes the market really starts to spool. You can get better at trailing your stop loss. So you've taken a partial here, but you let it run. You let it run. If it keeps running, you just trail underneath each order block that's created. Order block, order block, order block, or swing low, swing low, swing low. You can trail it up. So what actually happens is there is a sweet spot. There is a sweet spot. You then have a mix of both a 1-to-1 risk to reward from your partial, right? And we'll talk about it. Plus you might have taken a 1-to-3 risk to reward, excuse the writing, with the second contract. 2 contracts in, one off at 1-to-1, one off at 1-to-3. You balance that at 1-to-2 risk to reward, but you pay yourself early. So no matter what, you're taking money off the table. Let's get into the next step. So again, that's the first step here. And I mentioned here, you've got to write this down, guys. You've got to write this down. The 1-to-1 risk to reward trade must be a minimum of 10 handles. Otherwise, you need to aim for more handles. You need to. So for example, if your stop loss is 6 handles, because the market allows you to do that. Say you trade the Asian or London session, you might have a 6 or 7 handle stop. If your stop loss is 6 handles, then you need to aim for 10 handles. So essentially, you're going to target more than a 1-to-1 anyway on a lot of trades. If your stop loss is 20 handles, you target 20. If your stop loss is 30, you target 30. If your stop loss is 15 handles, you target 15. My stop loss position size is a thing. It's based on market structure. You can't always say, yeah, I can have a stop loss of 20 handles or 40 handles, because sometimes 20 handles is not enough. 40 handles is too much based on market structure. So that's what I like to do. Whatever my stop loss is, it's a 1-to-1 on that stop loss. And I try to mark out structural points, right, that align close to that 1-to-1 target. So that's point number 1. Point number 2 says this. If you lose your first trade, because we don't win every trade, guys. If you lose your first trade, then wait for another clear setup. Use your second trade to get back to break even. I teach this in my premium Discord. I preach this on YouTube. I'm telling you guys here. Use the second trade to get back to break even. So let's give you an example here. Let's say, for example, you take a loss, right? Let me get rid of this. And let's say, for example, we'll remove this from the charts. You take a loss of, say, $200. Let's write it out. You take a loss here of 200. So you're now down 200. The max you want to lose for the day is, say, $400. Now, you're able to still take another trade. So all I'm trying to say here is you go back in with another trade, and maybe your trade, you're risking $200 on the trade. So you take a 1-to-1 risk to reward. And if you win that second trade, you're now back at break even. So these are the risk management points that you have to consider, right? So number 1, like I said, if it's your first trade, take a partial, hold a runner if possible. And the risk to reward must be at least 10 handles. So for example, like I said, if your stop loss is 6 handles, you need to go for at least 10. Because otherwise, what if the next day you come back and you have to risk 15 handles for a stop? You're putting yourself in a really bad position. Number 2, like we said, if we lose the first trade, we wait for another setup, and we can use the second trade to go back to break even. Or once you gain experience, you can then try to hold a little longer to take some more profit. So for example, if I get up another page here for you guys, have a look at what you could see. For example, say price does this, like I said, and we have all this low resistance. You might be looking for a sell position, right? This might be your second trade that you've taken, or your first. But anytime we have low resistance and we take a trade up here somewhere, this is where you're looking to hold runners. When you have a big buildup of low resistance, and ideally, here's the key point, ideally you're delivering from a higher time frame PD rate. A combination of these things, in my opinion, either the first trade or the second trade, once you build more experience, should allow you to hold for a little bit longer and allow your trades to be positively impacted by what you're doing. Keep that in mind. Number 3 is if you win your second trade, then you can consider taking a further trade, right? So for example, you might lose the first trade, win the second trade, you're back at break even, you can consider taking a third trade. And that third trade, it doesn't have to be a home run. It can just be a base hit. And if you win this, you are done for the day. If you win this first one, you're done for the day. If you end up here with a little bit of profit, you're done for the day. If you end up here with profit, you're done for the day. Once you're in profit, don't give it away. Keep it in the account, because a lot of people go on tilt when they've made profit. They're like, yeah, I want to risk a little bit more, make a little bit more money. And then they lose that profit. They're going to draw down and then they end up negative for the day. So keep that in mind. And the fourth point here is, if you lose your second trade, consider one more trade. But if you lose that next trade, you have to be done. So for example here, let me just get rid of some of this stuff. Let's say, for example, you risk $200 per trade, right? Most people risk about that for a 50K funded. You risk $200 on the first trade, you lose the whole amount. You risk $200 on the second trade, you lose the whole amount. You're done for the day. You can't trade anymore on that account. However, if you get good at risk management and you only lose like $50 in the second trade, in my opinion, you've got one more trade left. If you still feel mentally, all right to do so, and if the session hasn't been too challenging. And that one last trade, you're down now 250. That one last trade, the goal of that trade, like I said, if you're down, should be to try and reduce the negative. And if possible, try to go back to break even when you start. When you build more experience and the market conditions are more primed, like I said, like this, low resistance, then you can hold runners. Then you can try and extend it a little bit more. But you do not want to push the edge too much. And the most important thing with trading is capital preservation. So you've got to preserve the capital. Whatever you have there, if you've made money, preserve it. If you've lost money, try to bring it up a little bit. But if you end up with a small loss for the day, that's fine. You're trying to reduce the losses, but increase the winners. And this system allows you to do that, right? This system allows you to do that. So for example, let me talk through a few things here. Number one, have a look at this trade idea. This comes from the 6th of May. So I'm recording this on the 7th. Have a look at your charts, the 1250 to 110 macro. Now, if I enter with 2 contracts, with 4 contracts, with 6 contracts, an even number of contracts, most likely what I'm going to do, I've entered 2 contracts here. I'm going to take one off at 1-to-1 and then hold a runner. Again, that's what this risk system says. Take a partial at 1-to-1 and hold a runner. That's exactly what I did here. Did the runner work out? No. So in this case, one contract comes off at 1-to-1 and one contract comes off at break even, which is fine. You accept that and you move away. Again, if you win this first idea, you're done. You're done. You walk away. Example number 2, I've entered with 3 contracts. Now, these could be minis or micros. They can be used interchangeably. If you enter with 3 contracts, what I personally like to do, I take 2 off at the partial and I hold 1 for a runner. That's what I've done here. So 2 contracts in here, I've pyramided in. I've taken 2 off at 1-to-1 and then 1 off down here. Next example, what if you only enter with 1 micro or 1 mini? Because there could be a few, right? So I'm giving you examples of how this risk management system applies in different conditions. If I enter with 1 contract right here, that's my stop. That's a 1-to-1. There's nothing wrong with going for a 1-to-1. You can take it all off at 1-to-1. What I like to do once I've got more experience now is if there is a buy side liquidity point that I think is going to be hit and the 1-to-1 target, which is here, is quite close, I try to hold for that, right? But as we approach this target, I'm getting very close and very ready. If it looks wrong, I'm closing the trade at 1-to-1. So I'm market executing, usually to get into the trade. And if I'm in with 1 contract, often I'm going to market execute to get out of the trade. That's important. And here I actually squeezed a bit of juice. This pulled back a bit to about here, but I squeezed on this trade about a 1 to 1.6. And this is how you get the benefits, right, of a higher risk to reward system, but also the benefits of a lower risk to reward system. You're paying yourself as a trader. You're taking the money off when it's there. And then if the market decides to run, you're then allowing the market to run. So you're paying yourself. You're paying yourself first. And then when the market decides to run, if it does decide to run, then you're giving yourself the opportunity to make a bit more money. And again, there's the old saying, which in my opinion is extremely true. Cut your losers short and let your winners run, right? Even the biggest traders in the game, the biggest traders, guys, you can have a win rate of 30%, 40%. What are they doing? They're letting their winners run, and they're understanding that some situations are a risk on situation, other situations are a risk off situation. So for example, when should risk be on? when should risk be on? And you might ask this question to me. We're going to talk about it. Risk should be on. I'll illustrate a few examples here. Risk should be on when you are delivering from a 15-minute fair value gap, when you are delivering from a high time frame zone. For me personally, right, and this is not financial advice, if price has been doing this and it taps into a high time frame zone and there's a macro and there's a reversal, I'm putting risk on because based on my data collection, based on probability, there's a greater chance that this could really run and make a lot of money, then reverse back up. Now, it works sometimes and other times it doesn't, but it works more than it doesn't. So it's a profitable method to have risk on. What about the opposing side? When should risk be off? Like when should you kind of be cautious? When should you say, oh, maybe I'll sit on my hands and maybe I won't do too much? Risk should be off when you're not delivering from a high time frame zone, or when the market's very choppy, or when the candles are very slow. So for example, say you have the same situation. Price does this, it pulls up into a high time frame zone. We get the initial reversal. The initial reversal, a lot of money, in my opinion, can be stacked there for me personally because I'm very confident that this pivot point can move quite a bit. However, if price starts to do this, do you think I'm going to put a lot of risk on? No. If we're in between the low and the high of the range, if we're in the halfway point of the range, I'm not going to put a lot of risk on. It'd be scalping. So you're then applying these risk management rules with the principle of risk on versus risk off, right? Risk off and risk on is the most important thing, I'd say. Once you know the system that you're working with, once you know the PDRAs that you're working with, you need to get good at when to put risk on and when to have risk off. Because then here's the thing, this will allow you to implement the sweet spot to a better degree because you're going to be risking more on A+ setups. And those A+ setups, what are they going to do? They're most likely going to run more. And if those A+ setups run more and you're risking more on those setups, you're going to make more money, meaning that when you have a bad streak, when you have a bad run, the money you've made from those good A+ setups are going to carry you forward. And that's the true key, guys. So again, I hope you've enjoyed this video. I've recorded it in 2 parts here. And if you have any questions about this system, ask me below. But this is what I trial out. Trial it out. You can make some tweaks in between. I've got a free Discord, I've got a paid community, but join the free Discord below. The link to that should be in the description of this video. And until next time, guys, I'll talk to you soon. Peace out, all the best. And again, any questions, ask them below. I'm happy to help out.